Welcome to part one of Intro to Investor Relations. Today we're going to look at three things. What is investor relations? Who is today's investor relations officer? And what does the investment audience look like? Before we get started, I do want to point out that there is a glossary of terms at the end of this presentation so that you have a reference point for definitions of commonly used terms in investor relations. To start, let's look at two definitions of investor relations. You'll see that both are pretty similar. Investor relations is a function that combines finance, communication, marketing, and securities law compliance. It's also a two-way form of communication, meaning that investor relations both provides information to the investment community and it provides information to the management team. The role of investor relations is twofold. It first is to help a company establish its valuation within the investment community, and it's to help the management team understand how the valuation is being influenced by various factors. What do investors really want from IR? Well, as you'll see, it's pretty straightforward. They want consistency, they want fair treatment, they want equal access to information and knowledgeable resources, and they want transparency. What is the value of IR? Well, as you'll see, it's quite significant, or it can be. Effective IR can add up to 10% to a company's valuation, and ineffective investor relations can subtract 20% of a company's valuation. So, as you can imagine, investor relations not only is important on a day-to-day basis, but is particularly important to protecting a company's valuation during a crisis or a period of unfavorable performance. Well, how does it go about adding this value? Well, here's a list of some of the more common ways it does it. It's helping companies establish timely, credible, and reliable channels of communication. It's cultivating the interest. It's providing market intelligence and investor feedback. It's increasing the access a company has to capital. It's managing that performance to expectations ratio, and among other things. In this chapter, I wanted to take a quick look at who is today's investor relations officer, because that individual has changed over the last decade or so. Today's investor relations officer now comes with a finance background more often than a traditional communications background. In 2012, a study found that more than 40% of investor relations officers held accounting or corporate finance positions before going into investor relations, compared to just 12% that came with communications or public relations background. In 2013, Revell Research found that nearly 70% held accounting or finance positions before going into investor relations. And we're seeing a lot more former sell-side analysts now going in-house at the companies that they once reported on. Very often, these individuals have responsibilities within the organizations that go beyond IR. And that's why many of our clients will have titles like Vice President of Finance, Manager of Financial Reporting, Treasurer. Some of the small cap companies that we work with at Q4, you'll see that some of the folks that we're working with are actually the CEO and the CFO. Seemingly, no two in-house IR functions are built the same. As you'll see, IR professionals are well compensated. They do have a senior position within their organizations. But as you look at the budget information, you'll note that they are being asked to do increasingly more with less. Let's take a look at the IR function for a section. You'll see that it has the Chief Executive Officer, At the top, you'll have the chief financial officer and the general counsel, or the otherwise known as the in-house lawyer, below that CEO level. And then you'll have investor relations, financial reporting, corporate strategy, and compliance flowing into those executives. 10 years ago, 15 years ago, you probably would have seen investor relations flowing into corporate communications rather than the chief financial officer. And in many cases, you would have seen investor relations reporting directly to the CEO rather than being a piece of the finance function. As you likely already know, there are a lot of folks, both internally and externally, that are involved in investor relations. Internally, you have the board of directors, you have the in-house legal counsel, you have the corporate secretary, you have corporate communications, and you have risk management. Externally, you have outside lawyers, accountants, auditors, you have outside IR firms, investment bankers, and the like. All of these folks are influencing and participating in the company's communications to and from the investment community. Speaking of the investment community, let's take a look at who we mean by that. Well, on one side you have the buy side. These are the folks that are buying and selling securities or stocks for investment purposes. The largest piece of the buy side are institutional investors. Those are portfolio managers, analysts, pension fund managers. These are folks that work at foundations or insurance companies. They're mutual fund investors. They are hedge funds as well, and they're sovereign wealth funds. Equally important, but less prominent, is the retail community. Those are individuals or employees that buy and sell stocks and mutual funds. There are a lot of different types of investment styles within the buy side. You have folks that invest in growth, value, balanced, growth at reasonable prices, large cap investors, global investors. This is just to name a few. The buy side is a very fragmented market. Each investor with its own criteria and its own style of investing when it considers what funds to look at. On the other side, you have the sell side. These are the folks that facilitate the selling of stock. They provide research and other services to investment managers. You have investment bankers, you have research analysts, you have brokers, you have boutiques. All of these folks are trying to help the buy side find the right companies to invest in for their particular fund. And again, 10 years ago or so, their role was very heavily weighted on research. Today, it's much more weighted on access and helping to arrange meetings between senior company leaders and the investing audience. Not surprising, when you have a lot of players involved, you get a lot of opinions and a lot of emotions. A study from 2013 found that emotion, not rational logic, determines the stock market. Stock traders make decisions based on psychological factors and may play undue weight on specific information at the expense of relevant data. Simon Sinek, the author of Start With Why, says it another way. We trust our gut even if the decision flies in the face of all facts and figures. And that's important for us to remember at Q4, that we're not only helping to inform and deliver information and data, we're also helping to frame and create a company story. How are stock prices established? Well, It starts with our head. It's quantitative analysis. What you'll see here are different financial metrics that investors use to determine the strength and attractiveness of an investment opportunity. There's also a lot of gut and heart. Perceived potential is as important, if not more so, than past performance. Think about that. It's not so much what you've done, but what the street thinks that you may be able to do in the future. Intangible assets account for 30 to 50% of a company's valuation. So things like management credibility, customer loyalty, market position, innovation, brand strength, all of these things also play into how a stock price is established. And that's part of the storytelling that at Q4 we help our companies achieve. As you well know, there are any number of external factors affecting a stock's price. It could be media coverage. It could be how investors feel about your sector. It could be global financial markets or geopolitical conditions. It could be the buzz on social media or the current trends of regulatory and rating agencies. All of these external factors create energy in and around how the investment community perceives a company's stock. Similarly, there are internal factors that affect value. The makeup of a company's shareholder base can impact the stock price and how the trades of the stock take place. How much of it is in institutional hands versus retail? And of the institutions, what's the composition? Are they hedge funds? Are they mutual funds? Are they long holders, short holders? Do they play in dark pools or trade on exchanges? Other internal factors such as float, liquidity, the corporate structure, all of these things are other factors that influence how a company's stock is priced. Where's the stock priced? Well, as you'll see, it's a pretty diverse universe of stock exchanges, dark pools, and other trading platforms, all of which can and do trade a company's stock throughout the day, around the clock. Here is the glossary that I mentioned, and in it you will find all of the definitions for terms that were used within this presentation, as well as some of the other terms that I thought would be of importance for you to have access to as you counsel your clients in investor relations. Thank you very much for participating in part 1, and I look forward to discussing this topic further in part 2.